Hey guys, Bill here, and in this video I'm going to talk about using Traditics Algo Flow to find divergences, both bullish and bearish, and how I use that to make trades intraday and also when doing my evening prep for the next trading day. So what we'll talk about is what is Algo Flow, what's an Algo Flow divergence, why is it useful, and how should you use them. All right, so first off, Algo flow is basically just an aggregated and cumulative representation of options flow all throughout the day, like minute by minute. And in even simpler terms, it illustrates the sentiment of the market participants at all times. All right, so why is this useful? Well, instead of having to manually go through all these flow orders to find plays, which can be cumbersome, Algo Flow shows a simple visual representation of flow sentiment and makes it easy to identify patterns that can help you find effective plays. And what we see here on this page is the options ticker dashboard. And I've just searched for KWeb. And you can search for any stock in here and get this chart pulled up that has the price action, the time frame, and then here these red and green lines are your algo flow. So obviously green is bullish and red is bearish, and there's the baseline right there. Below is bearish, above is bullish. And a divergence in algo flow means that the flow is telling you one thing, whether that's bearish or bullish, but the stock is doing the opposite. And why this is great is because you can start to get ahead of a move that's could be coming based on the flow. So in this instance, you can see that earlier on in the day, KWeb had some bearish flow, and then it flipped bullish. And it really kept growing bullish all day. But look at the price action, downtrend the entire day, right? And then by the end of the day, we have this nice gap between the price currently and where the flow is. And that's what's so awesome about the visual representation is this space is like something you want to see the price get back to. And when you see these gaps, that means that gap can get filled by the price action. So this line isn't just there to just say, oh, it's very bullish. It's also the gaps you want to identify, and that's the divergence. And that means there's all this space for KWeb to bounce, all right? And there's three main things when you're looking for divergences on different individual tickers that you're going to want to keep in mind. First is you want to find the biggest divergence possible. This is an okay divergence. It's not super big. But I'll show you some other examples of where it is bigger. And second, you want this divergence to happen across multiple time frames. So right now, this is defaulted to 1 day's worth of time. As you can see here, it's 9:30 to the end of the day. And you can change that by coming in here. I know it says 1 minute, 5 minute, 15, but these are days. So 1 minute is 1 day. 5 minutes is 5 days. Let's check the 5-minute chart. Now that is a big bullish divergence. 1 minute is best for intraday plays and day trading, and 5 maybe for a couple days out. But you want to try to see a pattern across all these where they're all in agreement. That's going to give you really high conviction that this stock could have a nice rebound to the upside, okay? You can even go as far as out to the 15, and that's a nice divergence as well, but that's maybe more for swing trading, like a couple months at a time, okay? So the last part of this is we've talked about we want a biggest divergence as possible. We want some time frame continuity. The last thing is you want to check your charts, okay? You don't want to just slap these plays because you see a divergence. You're going to want to still check your chart, look for support and resistance levels, and what are you seeing there? Try to get the best entry as possible. And how do you find these intraday? Well, there's another tool that Traditics has called Flash, and it's an intraday stock scanner. And to look for divergences, first you're going to want to select optionable, and then you're going to go over to the divergences tab and select algo flow divergences. Now, Obviously, these stop at the end of the day, so this is a whole day's worth of a scan. And you can just keep this pulled up throughout the day. You'll notice here, like UVXY, it says 1 day divergence, 5 day divergence. Well, that's like the 1 minute and 5 minute on the chart we were just on. And that's great, but there's something to keep in mind. Things like UVXY, SPX, QQQ, they're often used for hedging. So usually I will ignore those, at least on divergence scans. But for individual tickers or smaller, things like KWeb and things like that, it's more accurate, okay? But this is great also for the end of the day. So maybe you're looking to hold something overnight, or you're doing your prep in the evening. You can go through maybe the last hour or so of these divergences, and then you can pull up the individual tickers on the page we were just on and kind of look at the flow and check it out on different time frames, and you can identify plays like that. It's pretty simple, really. So let's talk about a few other things and show some other examples here. Let's look at like how you would read something on this page and then how it could react on the chart. I mentioned earlier that when you see these big divergences, you want to see that price action react to that in the future and get up there. So does this really happen? I'm going to show you an example of how it does. Let's check out Tesla. And let's go to the 5 day time frame, because we're going to go back in history here and look at some things. As you can see, sometimes it takes a second to load. But Tesla, it's been pretty bearish lately, right? And let's look at back here in this area. This is the 27th. So all day on the 27th, the algo flow is pretty bearish. And then, the price action on Tesla, it comes down, makes a dip and kind of consolidates, makes a little move up, dies down again. And we get into the 28th. And on the 28th, the algo flows remains bearish. It's even kind of going down a little bit subtly, but you notice that Tesla's price starts to increase. And by the end of the day on the 29th, it's made a pretty good move up, but the algo flow is still down. So let's check out Tesla on Webull on a chart here. And here's the 28th, okay? So what we saw on the chart, same idea, Tesla price action moving up. And now here's where we're checking our charts and using that in conjunction with algo flow to see if we should take a play or not. I've got my fibs up here, and look where Tesla tops out. 289 psych, just under one of my key fibs. And look at that gap, that divergence. That's big, right? So this would be a great sign. Maybe you like to hold things overnight. You see here, Tesla looks like it might be topping out. We see the big divergence on the algo flow. Let me buy some puts and see what happens. Well, what happened? We gapped down first, which you're already getting paid now, and then off the open, it's a huge flush. And if you bought in around 289, you could sell here at 270. I mean, just banking off that play. This is the idea behind why these divergences are so powerful and how they can help you get ahead of the trend. So let's recap a little bit. When you're looking at divergences, you want to make sure it's a big divergence. So that's a pretty big gap, okay? The more you get used to looking at these charts, you'll be able to more easily tell what's a big gap and what's a small gap, because you're going to be typing in a bunch of different charts, a bunch of different ticker names every day. Looking at the different divergences and things like that. Here's Apple, for example, okay? It's been bearish lately. It's bearish flow, it's bearish algo. But look there's really no separation here on the 1 minute at the end of the day. There's not much separation, I don't believe, on the 5. No, there's a little here, and look the price just kept going down until it ran into the algo flow line. So it's almost like the algo flow lines, when they're gapping, are almost like your target, and you can kind of use that in conjunction with your own charting and your own TA to decide when you enter and exit things. But this is an example of, kind of a stock following the trend. There's a little gap here. It fills that gap by the end of the day. And when the flow line and the stock price are close together, that doesn't mean that it's not going to continue to be bearish, but you're not going to maybe expect a huge move. You're not going to have as high as conviction of keep slamming puts here unless you see, more of a gap like that. But yeah, so you want to see as big of a gap possible. You want to check all those time frames, 1 minute, 5 minute, ideally 15 minute. If you're a swinger, that's better. But I like to really look for the 1 and 5 and have them in agreement. And then you're going to want to check your charts, identify support and resistance levels. Try not to buy at resistance, even if there's a big algo divergence. Maybe wait for confirmation over that resistance and then enter. Or, try to ideally, enter on a pull to support if you're playing a bullish divergence, or enter on a pull to resistance if you're playing a bearish divergence. But that's really it. Like I said, you can use that flash scanner intraday, and you can also use it towards the end of the day to find plays to hold overnight, or to just do your prep in the evening to find tickers that might have big bounces or big fails the next day based on the flow trend. And that's really it, guys. Algo flow divergences, tradie ticks. If you have any questions, let me know in comments, DMs, wherever you can get in contact with me, and I'll help you out. Thanks.